All right. What's up, everybody? How's everyone doing? Everyone have themselves a good Thursday evening. Yo, what's up, everybody? So, yeah, happy Thursday. We did, I think, a pretty good job here managing or navigating pretty choppy session, right? Things broke down in the afternoon, found a little bit of recovery there later on going into power hour, but not too much easy action for us here today. More than anything, I think today was a really good, call it disciplined day, right? At least for myself personally. Had a couple entries that were just like a little bit outside of where I wanted, and just didn't get like pot committed to that idea, right? Caught myself making a mistake, got out of that trade, even though it was a winning position, and just didn't put myself in a situation where I was going to compound mistakes or screw anything up. And it was painful because those moves ultimately would have, gone another 20, 30, 40, 50 points, even potentially. And I missed out on that, right? Taking a 3 or 4 point win when it could have been much more, but rewarding a good outcome with bad process is just honestly a super dangerous thing to do as a trader. And the more that I can avoid making those types of decisions or chasing those types of moves, think the better off everyone is going to be, right? So learning how to manage that dopamine, learning how to control those emotions, trying to be objective when price action behaves, in ways that make us compromise, and finding that objective today wasn't easy, but I think ultimately was a really important thing to do in today's trading session. And ultimately, the thing that I'm kind of happiest or proudest of, I guess, if you want to call it that, from today's trading day. Happy to open up the floor here for any questions. Hopefully, you didn't hear my dog squeaky toy there in the background. But yeah, happy to start firing through here and see what people got. I don't know if it was cute, but it certainly was a good process day, right? It's one of those days that sucks in the moment, but kind of see the compounding effects in 6 months type thing. Oh yeah, yeah. It was my dog. He's trying to get some attention for me or from me. What's the struggle with psychology? What's yeah, what have you been stuck on? My win rate on the year right now, Ronald, is like 57%. My average win is $2,400, just a little bit under $2,400, and my average loss is just under 700. All right. So your question, Shirley, how do I get over getting stopped out and then try not to get it back right away? Hey, Ricky. Sorry. Um, so I think that with like it's an ego thing, right? The sting of being wrong or the sting of being incorrect hurts more than the actual losing money. What you got to figure out is why you care so much or put so much effort or so much emphasis into the result of a singular trade. You're not one trade away from being rich or from accomplishing your objectives. So I think it's fruitless or pointless or a waste of energy to judge ourselves or to judge our progress on those day by day results. The thing to start to focus on here, the thing to gamify, right, is to not judge yourself based on if the trade worked or if it didn't, but to judge yourself based on did you follow your rules or you didn't? Did you learn something from that trade or you didn't? Right? Find something that isn't financial that you can turn into a binary. That's a lot healthier and a lot more sustainable than needing each trade to be a perfect outcome or to give you the exact result that you're looking for. From there, right, you'll start to focus in on specific technique things. Like, today we talked about when I closed my trades because my entries were outside of my entry window. That was a bad outcome, but good process, right? Where the outcome of closing that trade left a lot of money on the table, but the process of doing it was good, right? I rewarded the right thing when I caught myself making a mistake. And so that's the thing that I'm celebrating. I care more about that than I do about the P&L that I missed. I honestly haven't thought about the missed P&L here at all today. And it's because I know that I screwed up. I know what I screwed up and I know how to fix it. So taking something that maybe makes me feel a little bit hopeless or taking something that makes me feel like I've lost control or it's not working out, I counter that by being deliberate in finding what the antidote is to that anxiety and then use that hard work and that focus to fight or hedge the ego creeping up and being a pain in the butt. So I think a lot of what you're saying there is, there's a bit of a caveman brain kind of going on where you're very like outcome focused, and we got to get to process focused and really judging yourself on the quality of did you follow your rules, did you trust your setups, did you behave how you said you were going to behave, and then not holding it against yourself when you lose, because you will, and you'll lose a bunch, and it's going to happen to everybody. So we got to find ways to get comfortable in taking our losses. And if you find that it still stings and it still hurts, then maybe think about your position sizing. If you trimmed your max loss by half, do you think that it would sting as much as it currently does? I think that would be the starting point there as well. Yeah, trusting. I think the hard part about trading, the hardest thing about trading is finding an edge. The second hardest thing about trading is trusting your edge when the market is, or your emotions are telling you otherwise. And you need both of those to kind of work in unison if you are going to find success as a trader. Now, I'd say I'd be careful demo trading, right? And having that as like your relief mechanism, because you're kind of training like a fast twitch muscle in a different way. And there are other healthier, more sustainable ways than needing to like get that energy out in a paper trader. So 20 per point, right, would mean that it's $40 total, right? Or 20 per contract, not 400. You would need a 10-point move with two contracts to make $400. With my stop loss within 10 points, yeah. So, yeah, my reference price is always going to be 10 points from my stop loss. So I'm looking for an entry to be 10 points or better. Any other questions here, team? What else we got this afternoon or this evening? What do we got here, team? Any questions? I know we did a bit of overtime on today's stream. Yeah, so I've seen you anticipate a fake out, especially after the first confirmation candle of the day. Is that experience or is that seeing how the price action is moving? So I would say that experience is just remembering how the price action has been moving, right? That's kind of how I would define experience in this sort of trading context. What I will say is I think that there's a transition. Yeah, I'd say there's a transition period as a trader where when you have a gut feeling or something feels whatever off or different or strange, a lot of people, they're willing to like overpower that and be willing to take the trade anyway. I think my trading changed significantly that when I got those feelings, or I don't know, you get like some premonition of what the market is going to do. It sounds stupid, but sometimes you do. That my best bet is to get objective and to analyze that new information further. And so the only way that I can truly get objective in that situation is to basically delay my entry, right? To pause when I'm looking for it. So if something, comes up, and I think a lot of this comes from the consistency, but if something comes up that feels different or doesn't behave how I perceive an A plus setup to behave, I would rather wait and reset than try and lose money. And that's not always perfect. Like I will get that wrong all the time. But generally, if I'm getting an emotional reaction to something in the price action, that's probably a reason for me to try to get objective, to reset, and see if I can find another entry. And then the anticipation of it, right, is kind of like a muscle memory. So, I've traded, I don't know, probably 3,000 or 4,000 opening range breakout setups at this point over the course of my career. I can't remember all of them, right? No doubt about it, but all of them kind of add up enough information. And so if your process is consistent and you do the same thing every time or near the same thing every time, then you build up like a reference of what feels like it's working correctly or what feels like it isn't working correctly. And that ends up being like a way to sharpen your edge as well. So it's the consistency in my technique that allows me to maybe notice those subtle patterns, and noticing those subtle patterns, well, just can make you a lot of money or at least save you a lot of money. So confirmation candles can get invalidated in two ways. So let's see if we can find an example here in today's price action. All right, yeah, so this is a good example here. So we have like this 1340 candle, right, on the 2-minute time frame, and that's a really textbook breakdown through low of day. You'd be looking for a continuation move here, and if we traded that using the ORB technique, right, there would have been about 100 points in that move. Amazing, right? So that's great follow through. This then candle at 1346 has invalidated the confirmation of 1340, right? And it's done so because this volume is larger than the volume we had that said that bears were strong. In fact, right, this was what, the second largest volume bar of the day at the time. And your indication that bulls or bears, right, they flipped control. So number one way that you invalidate your confirmation is you see volume that is opposite to the other side of the bet that you were taking, right? So if I'm bullish and I see bearish volume that's larger than my confirmation candle, yeah, I'm done, right? I don't have any juice left in that. And then if I'm bearish, like this example, if I get bullish volume that's larger than my bearish confirmation, I'm done. So I'm out of here. The second thing that will do it, and this is a rarer one for us to deal with because we'll mostly get stopped out before it happens. But a candle, if it closes and holds above your confirmation high or low, that also invalidates it, right? So if I was looking at a bearish setup and then this next candle closed at 860, called 867.25 instead of down here at 765, then this confirmation would be invalidated. So you invalidate it by holding higher highs or holding lower lows, or you invalidate it by seeing larger volume than the confirmation volume standard. Hey, Norman, how you doing? All right, what else we got here? Team, what other questions we got? What we got here, team? Any other questions? Oh, he was just coming in here with the squeaky toy for a little bit, and he was trying to steal some attention. Today would have seeing how the Qs were reacting in the afternoon, given earlier indication of going sell or buy. Is that what you're asking? Hey, Shirley, if you have any questions regarding your specific account, please just email backoffice@daytraderfunding.com. We can't, I can't investigate your specific account status here at the moment. It's not really an appropriate use of the group coaching call time. If you send us an email, we'll take a look and see what happened. Yeah, even with intraday, right? Like the only way I can answer that question is to look at your specific trading history. I can't do that in this call right now, right? So I can't really give you an answer. I don't know what your equity balance high was or low was, or what your P&L swing looked like intraday. So please just email back office and we will take a look. So I don't know if looking at the Qs would have given you an indication of selling or buying. You know, personally, not what my strategy would be. Like I'm trading the indexes, right? So I'm trading NASDAQ, which is effectively QQQ, right? It's the same or very highly correlated. So I wouldn't necessarily be looking at that. If I was saying, okay, I want to find the leaders in the clubhouse that are pushing the direction, I would look at the names that are the biggest part of the index, right? So Apple, Tesla, Microsoft, Nvidia, right? How those names behave are going to be a better indicator of if the index is going to sell off or not. So personally, I just trade, candlestick and volume concepts, quote unquote momentum concepts, and that gives me the information that I'm looking for. I don't really use anything else to find that narrative. I also got here, team. Okay, yesterday, 2-minute candle, 1:30 Eastern, or 13:10 Eastern. Yeah. What about it? What's the question? Hey, appreciate that, Norman. Good, nice way to digest your dinner, hopefully. Yeah, what's the question though? You've only given me a statement so far. So your setup in this situation, right, would be a high volume breakout over high of day, right? So high of day would have been like this, correct, right? Increasing outlier volume, break, hold, and above, fine. Maybe I would have been more interested a little bit later on. I generally don't like trading breakouts like later in the session. They can often lack momentum. But if I saw this candle at 9:50 in the morning, 100% that would be an A+ setup. Actually, I haven't had dinner yet, Norman. So to be determined. So when I decide to enter a trade and I wait for the candle to pull into my entry zone, what informs your decision to press the button? Am I happy with my risk? Do I feel calm in my decision? That's it, right? If all my other criteria have been met, that's the only thing that I'm paying attention to. So for me, right, the risk that I'm trying to get is less than 10 points per contract. So then, okay, do I have less than that? Yes or no? And then when I go to click the button, do I feel like I'm chasing it? Do I feel like I'm letting it come to me? Do I feel like I'm afraid of it? There's, one correct answer there. So you want to find that balance. So for me, is it within my acceptable risk framework? Do I feel calm clicking submit? Then sweet, I've got no reason to hesitate. I'm probably going to lose or I'm probably going to win. Like it's the actual next result is kind of random. So all I can do is try to be as consistent with my process as possible. There is there's no magic word or there's no magic whatever. You just have to click the button and let variance do its thing. Well, I didn't like my fill, Norman, because objectively it was objectively a bad entry, right? So if my reference price is now supposed to be 10 points and my entry is now 12 points, right? Well, I'm risking 20% more than I wanted. I'm not happy with that decision. So I have no choice but to close that trade. Yeah, Dave. I mean, I've said this a million times before, but guys, if I thought I had an edge trading in the afternoons, I would trade the afternoons, right? It would be more profitable. It would be more fun than doing like one-on-one coaching calls or doing those things or, spending hours answering emails. Trading would be a lot more fun. I would rather do that, but I don't have an edge trading those timeframes. So what's the point in basically wasting my time and money on something that I have zero evidence will actually make me more profits? Right? Why play games where you're expected to lose? So you're missing something, right? In your brain for you to feel confident in clicking submit. You either don't know what that calm feels like, you don't know what your good entry would actually look like, or you don't know what your risk is. So your job is to study your past trades and answer all three of those. Right? And those are all going to be unique to you. Like we said, for me, right? Like my zone is okay, have all my confirmation rules, my setup is active, 10 points of risk or less. Sweet, right? Buy as the trade is moving towards my stop loss. Sweet, right? Feel calm, collected, good posture basically when I execute my trade. If I hit all three of those triggers, I'm happy with my process. Again, I'm not solving for 100% here, right? Like your execution doesn't need to be perfect. It just needs to be consistent. I think a lot of times we try to optimize our entry so that we never get faked out or we can never take a loss or something never bad happens. But bad things only happen if you let your behaviors change after a loss, right? This is the only time bad things happen in trading. So your job is to just keep your behaviors as consistent as possible, study your patterns, and then patch your holes. You would then lose $600 worth of drawdown. You won't lose $600. You only lost $200, but you lost 600 of drawdown. So funded, you have an intraday trailing drawdown until you clear your buffer. Once you clear your buffer, you become payout eligible and your drawdown becomes end of day. The same drawdown rules of like a take profit trader, for example. I'm lost now, Shirley. No, your P&L loss is $200, right? In your example, that is fine. What you are being judged on is your intraday drawdown. Your P&L can be $200, but your drawdown can be $600. Right? Your drawdown and your P&L are different things. You need to separate them from your mind. They are not the same. Well, your drawdown gets dinged by 600, correct? Right? We're trying to reward people who don't have huge equity swings in their portfolio. So you close your trade once you're up $400, right? So if you're risking 200 to make 400, that's a big win. 2 times your risk. You should not, never let that turn into a loss. So you close as your P&L is increasing. Why we talk about that all the time in the stream. Close as that number is going up, not down, right? Get used to leaving money on the table before you're forced to. You didn't close fast enough then, right? And shit happens. There are always going to be times where you get torpedoed or however you describe it, right? That's going to happen. But unless you're losing like $3,000 from your equity high to your low, you're not going to have a tremendous impact to your drawdown, right? It's not going to like destroy your ability to trade. Now, if you have a consistent pattern of doing that, right, where on the last 7 or 8 of your trades, you're up $400 and then you close up 100, then yeah, for sure, right? You're going to have an impact to your trailing drawdown. So got to be deliberate there and you got to be focusing. I'd say I've been trading futures for about 2 years, a little bit longer than that. Truth be told, just with prop firms and the leverage and stuff like that that's available there, futures it's too good of an opportunity to pass up. And honestly, they're much easier than options. Going long calls, long puts. Man, some of you guys, you'd hate your risk management. Trying to explain the math would be a freaking nightmare. You don't have to worry about time decay. You get much better liquidity. If NQ is going to move, sweet. If it's not, well then, probably going full port on Tesla calls wasn't going to work anyway. So why not just trade the index? Best loser wins, Norman. Every single time. Best loser wins. Like my edge, guys, isn't my ability to win big. My edge is my ability to lose small, right? It's easier to make 11 points than it is to make 15. I mean, it should be in the coach analysis tab, Dave, but there are a few things on the DTR website that are currently being updated or improved. So there's a chance that it's, not visible. There's a few bugs that we're fixing out. Any other questions here, team? Any other questions? All right, team. Final call for questions. Final call for questions here. Speak now or forever hold your peace. Yeah, the week of the 4th through the 8th of May, I'm going to take off. Yeah, the 4th through the 8th. I got like a pretty intense day on the Wednesday. And then I'll want like a couple days to kind of just think about it. So I don't think I'd be in a, well, I should be told that I kind of need a little bit of couple days of sleeping in. Well, in most funds by start of day, end of day, right? So I think it's just traditional buying cycles, right? They get the information for whatever happened during the day to position themselves for tomorrow morning. In the morning, they position themselves for the day. In the afternoon, they position themselves for tomorrow morning, right? And you remember trading, because the market closes, it kind of behaves like an auction. So if you watch like an eBay listing, for example, I used to do this all the time when I was a kid. You'd see the flurry of bids. You see the flurry of bids come in last 10 minutes, right? And when it first opens up, when there's like 3 days and 22 hours left on the auction, the bid flow is really slow, right? So I think there's a lot of just like human psychology behind it too. Human psychology that then becomes established processes. The market's its most global as well at US Open, right? You still have London, you get some Asia that can trade it. You get Europe and North America. They get that nice overlap for 3 or 4 hours. I think that's why you see the most reliable momentum in that early part, because you almost get like stability from the diversity of participants. That's probably just confirmation bias. I don't know. Follow through's subjective, I guess. I don't know if it's more, but more for me, at least. There it was a little bit different, right? So I think one like working at a fund, you're never opening and closing your entire position all at once, right? So we had a 3-day, 30-day, and we'll call it 300-day portfolio effectively. And we'd be running a rolling portfolio. So if they've got, our max allocation that we could have, we had $11 billion in cash that we could deploy to the market. And then we have, say, margin and leverage and stuff like that on top. So you would just do a lot of like adding or trimming, but maintaining a net position. And then if like an event was happening, our algos would spin up their gypsy magic and they'd be like, okay, last time CPI after XYZ was going to happen, financials got crushed and tech did really well. So then we'd spend that afternoon going into CPI, getting net short financials and net long tech, and then trim out our winners, right, once the news dropped in the morning. So it was a different concept. A big reason the way that I trade now is because when I did work there, the most amount of volume or the most amount of trading that I consistently could get filled on was always in that first 90 minutes. So just kind of trading in like the same lane, I guess, that I was always most actively trading in. All right, what else we got here? All right, guys. Final call for questions here again. Final call for questions. Yeah, every Tuesday and Thursday. Every Tuesday and Thursday we do these. All right, team. Well, if no further questions, I'm going to kill it here for the evening. Same deal like always, right? If you have any questions or tech issues, please email backoffice@daytraderfunding.com. Take a look at it here this evening. Make sure you guys are all set for tomorrow. But I think it's been a much more stable week here, so it's been fantastic, and it's been a much nicer trading week too, which kind of is beautiful. So we'll hopefully have a nice end to the week there tomorrow in the stream, and we'll crush it then. So have yourselves a great rest of the evening, and I'll see you guys tomorrow.